Hello, investors and traders, and welcome to the Midweek Market Report. I'm AJ Monte, Chief Technical Analyst with Sticky Trades, and we have about 5 minutes before the close of the market today on this Wednesday, May 1st. Before we get into the technical analysis for the rest of the week, let me just highlight what's going on here. I said that we would move higher to test that 20-period moving average. We did move higher, came within pennies of that upside target of 384.23, and then turned right back down. Yesterday was the hard sell-off as we hit my downside target of 379.61. Now, what's most interesting today is if you take a look what's happening in the minute-by-minute chart, they are absolutely punishing the market right now. This is one of the biggest bull traps I've seen in many months. Now, initially, the market rallied right here, and you can see the headline, major indices are higher after the Fed left rates unchanged. Fed Chair Powell said it's unlikely that the next policy rate move would be a rate hike. Now, keep that in mind that the markets have been waiting for rate cuts, and the rallies were continuing on anticipation of 6 rate cuts. Now, Fed Chairman Powell is saying that the rate cuts are unlikely, and the market rallies again on the news. But now they're punishing it. You could see that this is a minute-by-minute chart, and they continue to sell it off into the close. So for the rest of this week, I think we're going to be stuck more or less in a range. I think we're going to be stuck between the lows here and the highs up here, which is a role reversal high. Remember, we said the role reversal is when support, once broken, turns to resistance. I'll clean these lines up here to make this look a little bit more parallel, but for the quick snapshot, I think we're just going to stay in this range for a couple of days. If we break out below that support level, which is really going to be from the lows of 376.14, then watch out below. I would put on my seatbelt and take the ride lower. Now, if we look at IWM, same thing. We hit the upside target here perfectly from last week of 194.59. Pivoted right down from this roll reversal. Remember, I was highlighting that for you. And then we're on our way to hitting that downside target. By Friday, I do think the Russell 2000 will hit my downside target here at 194.59. So we'll keep that one in place. Taking a look at the Qs, we have about 3 minutes to go before the market closes. We came within pennies of hitting that upside target. Remember, that too was a roll reversal. Former support, once broken, turns to resistance. Remember, I teach through repetition, and that needs to get embedded in your brain because that is one of the most powerful horizontal lines that you can draw on the chart. So we came within pennies of that. Roll reversal, resistance. We came right back down. We hit my downside target right there at 425.73. Volume is increasing on the way down. So I do think we're going to go just a little bit lower. I'm just going to put this horizontal line here until Friday, and then I'll remove that and then draw my regular target lines on Friday like I usually do each and every week. So that is for the Qs. Look, we crossed down below the momentum line down there on the CCI. We did that today. So you generally get 2 to 4 days of downside movement after that cross takes place. All right, looking at SPY, we have the same exact story. Hit the downside target here, hit our heads up against that roll reversal resistance up here. Remember, former support broken, turns to resistance. We don't have a big volume increase today. So again, this is another one where I think we're going to stay between this low here and the roll reversal high right here. I think we're just going to oscillate in there. We do have a cross down below that momentum line on the CCI. So I'm leaning more towards the downside right now. All right, with less than a minute and a half to go, they're still selling off the Dow as we're doing this. Now, I want to take a look at the VIX, and then I'm going to do a quick shout out to the Bitcoin traders out there. Here we have it. Downside target on the VIX was hit. Then I said we're going to rip up to the high side. I'm keeping that longer term target on the VIX at 1838. So for those of you who are trading VXX and some of the other ones, you're probably loving that forecast right there. Now, I just want to make mention of my Twitter page. I posted this for the record post. Remember, I put my downside target on here that was reached. That green dotted line was my target that I put months ago. And now I think we're going to see a rally in Bitcoin. So I put my upside target at 62,509. How did I come up with such a number? Well, there we go. We got the close. Well, I basically drew a Fibonacci retracement line from this high right here to the target price down at the low here. And that 62,509 is the 50% retracement for the Fibonacci calculator. So that's really where I got that number from. I don't just pull it out of my hat. I pull it from the tools that we have available to us. Now remember, it's Wednesday. We have rapid fire stock analysis here tonight from 6 to 7 p.m. If you're not yet a member, it's not too late. You can plug in, enroll in my rapid fire stock analysis. I analyze anywhere between 60 and 70 stocks in that 1 hour. Sometimes I go over the top and hit 75. Now, my percentage of accuracy is the best in the world right now at 83% hit rate. What does that mean? Well, if I analyze 70 stocks, 83% of them will hit the targets that I put out within 66 trading days. That is documented and verifiable. We have an algorithm that tracks my targets, and when the targets hit, I get scored on that, and we're currently tracking 83% accuracy. Again, no one in the world is hitting that, and that's what we're offering for our members. I certainly hope you consider joining stickytrades.com as a member. Plug into any of the services that I have here. Of course, our most popular is the rapid fire stock analysis every Wednesday, again, from 6 to 7 p.m. You have a great evening. We'll talk to you on the next video. So long.